Welcome back. Now, let's see latest developments in the global commodities market, especially at the crude oil segment and Nigeria's FX market. And to discuss this with me is a research analyst at the financial derivatives company, Didi Agbaho. Thanks for coming to the program, Didi.
Thank you for having me.
So now, what's the oil prices are generally outperforming last month's average, but of course they remain volatile. Can you tell us why we're seeing this volatility?
Okay. Oil is one of the extremely volatile commodity which is currently driven by the demand and supply for the metals. And we can see this in, for instance, the increase in price due to the weakening of the dollar, and also a drop when the production is high. Take, for instance, Nigeria and Libya's output. So there has been, when there's a hike in production, the price tends to drop. But when there's, so it's just a demand and supply fundamental that basically pushes the volatility of the price. So
tell us, what exactly is the impact of this volatility on the domestic economy?
Basically, the oil sector contributes 70% of the fiscal and FX revenue. Therefore, volatility is not really, in the global market, is not really a good policy. It's not good for policy makers, basically. So, but nonetheless, oil has been trading at $51 per barrel, which still gives us some safe room, some safe revenue headroom, so to speak. However, this might be a good news, but we don't want to relax. We need to do some greater, take some greater steps to hedge the risk associated with volatility.
Now, talking about taking those greater steps, now let's talk about Nigeria. Of course, we see a target of $15 per barrel as the cost of oil production. But what does this mean for the country and the Nigerian oil market?
Okay, currently, so right now, what was the question?
Well, we're talking about looking at, the target of $15 per barrel and what this means, especially for the Nigerian oil market.
Okay, so currently our cost of production is $23, and we need to reduce it to $15. What this would mean is that there would have to be some level of investment in the oil and gas sector, and also we need to find more efficient ways of producing oil. And we also need to find a way of ensuring security around the Niger Delta environment, because the reason being is that if we can bring down the cost of production to $15 per barrel, that gives us some leverage. It gives us a better yield per barrel, because currently our yield per barrel is $28. But if we can decrease production to 15, going with the $51 that we currently have right now, we would have a yield of 36, which is good for our revenue.
Now, let's talk about Nigeria's forex markets, moving away from oil now. We've seen several interventions by the CBN into that market, but the Naira is still low, especially at the parallel segment. It's trading at about 370. So why is this?
Okay, currently I would say that's seasonal, because the current season, what we are observing is we have our Muslim brothers who are going on Hajj. We also have students who are returning to school abroad, so we have to pay school fees. And we also have vacation. It's summer, so people are traveling. So the aggregate demand is quite high than the supply. So despite the CBN's intervention, the demand is still high.
So are we likely to see the Naira appreciate in the coming days?
In the coming days, once this season has trended, once it's post-seasonal, yes, we would see that things would return back to normal, basically. And what would also happen is that it would not have that negative impact on the domestic market, because it's a season, and once things go back, things would return back to normal. It's not the structural factors that will be put into play, CBN's intervention, which is also dependent on oil proceeds. So as far as oil proceeds is good, then it is okay for us.
Many thanks, Didi Agbaho, research analyst at the financial derivatives company, for coming on the program.
Thank you very much.
Hope to see you again soon.
Thank you.
In other stories now, a federal high court sitting in Abuja on Monday ordered the interim forfeiture of some oil assets allegedly stolen by thieves. The court papers show the items include 500 vessels, boats, barges, trucks, tankers, and motorcycles. The court says the oil assets were seized by the Nigerian Navy and the Nigerian Police Special Task Force on Petroleum and Illegal Bunkering. The owners of the seized equipment and consignments have been ordered to step forward and explain why the items should not be permanently forfeited to the Nigerian government within the next 14 days. And in South Africa, President Jacob Zuma has signed the Financial Sector Regulation Act, known as Twin Peaks, into law. The presidency explains that the act aims to achieve a financial system that works in the interest of consumers and supports balanced and sustainable economic growth. The Twin Peaks model is expected to see the creation of a prudential regulator which will oversee risk taken on by financial firms such as banks and focus on macroprudential aspects of financial stability. It will be housed in the South African Reserve Bank. The act could also ensure cooperation between the financial sector regulators, the National Credit Regulator, the Financial Intelligence Center, and the Central Bank. And the Gambian government has opened bids for the licensing of 2 offshore oil blocks. Well, this follows the exploration of African Petroleum's rights to explore in the oil blocks. The Oslo-listed firm's CEO met with President Adama Barrow last month after oil officials in the West African nation said exploration rights for the promising A1 and A4 licenses would not be reviewed. And that's our program today. Thank you for watching. I am Bisi Adebayo.